Welcome to today's explainer. Picking a brokerage account can feel super overwhelming, right? There are just so many options out there. But today, we're going to transform that whole daunting task into a really simple, calming process. Our absolute main goal here is to design an environment for you that literally guarantees long-term peace of mind and effortless wealth building. So if you've ever felt completely lost in the sea of flashy trading apps and, frankly, super confusing fee structures, well, you are definitely in the right place. Okay, let's look at our roadmap for today. First up, we're choosing a safe platform, then avoiding gamification. After that, we'll cover costs and automation, comparing brokers, our opening schedule, and finally, the rules for peace. All right, let's dive right into section 1, choosing a safe platform. Now, this rule completely flips what the internet usually tells you right on its head. Choose boring reliability over flashy design. Think about it. You really don't need some hyped-up app that's just packed with marketing gimmicks, right? What you actually need is a sturdy, secure doorway to the financial markets. Honestly, when it comes to finance, boring is actually your absolute greatest ally. I always like to think of a broker simply as the kitchen where you cook up your financial life. Make sense? Because look, if your kitchen is totally messy and just stuffed with junk food, like, trending stock alerts and flashing charts everywhere, you're absolutely going to make bad dietary choices. But if that space is clean, simple, and well organized, well, healthy habits and consistent investing just become entirely effortless. Moving right along to section 2, why avoid apps with gamification? So, Kevin's story here perfectly illustrates this trap that so many beginners fall right into. He downloaded this sleek, incredibly popular app, you know the ones, filled with confetti animations and nonstop push notifications. And very quickly, these alerts screaming, "Hey, this stock is moving," conditioned him to literally check his phone every single hour. He wasn't building wealth, he was just spiking his adrenaline levels. Basically, he morphed from a calm long-term investor into someone just desperately seeking short-term anxiety-inducing entertainment. And we definitely don't want that. This really highlights the stark contrast between the myth and the reality of trading apps. A truly calm broker actually supports simple, consistent, and planned investing. But on the flip side, a gamified broker? It intentionally pushes you toward impulsive trades using leaderboards, flashing colors, and those crazy dopamine-driven alerts. Let's be real. Your investing environment should never, ever feel like you're playing a slot machine. Okay, let's get into section 3, costs, fees, and automation. All right, here is your absolute beginner checklist for choosing a platform. First off, your ideal platform absolutely must be highly regulated with a strong reputation. No exceptions there. Second, it needs to offer zero commissions on standard ETFs. And ideally let you buy fractional shares so every single dollar goes to work. But above all else, and this is absolutely crucial, it must offer seamless automation for your recurring deposits. You really want to be able to just set it and completely forget it. Now, a quick heads up here. Even when an app advertises commission-free trading, you still have to verify their actual fee schedule. It's kind of like reading the fine print, right? First, double-check in writing that ETF commissions are actually zero. Second, keep an eye out for those sneaky little maintenance or inactivity fees. And third, watch out for the hidden traps like really high margin lending rates or payment for order flow schemes that beginners so easily fall for. Which brings us to section 4, comparing brokers. So to eliminate any emotional bias from your decision, just use a really simple beginner scorecard. Take 2 or 3 brokers that actually meet your criteria and rate them. Score them on trust, on their automation capabilities, and most importantly, on their temptation level. And remember this, the lower the temptation and notification level, the higher they should score for you. Using this method actually makes identifying your perfect, calm platform incredibly easy. Now for section 5, schedule for opening and deposits. We all know decision paralysis is a real thing, right? So to avoid that, stick to a strict 7-day timeline. It's super simple. Day 1, just confirm your shortlist. Day 5, decide on your funding method and actually set up the link to your bank account. And then day 7, schedule the actual account opening. Spacing it out exactly like this keeps your momentum going smoothly, all the way from reading that fee schedule to officially owning a ready-to-go account. And finally, section 6, rules for investor peace. Once you're set up to really guarantee your long-term peace of mind, you've got to adopt these strict behavioral guardrails. First, commit to checking your portfolio only once a month. I know it's hard, but do it. Next, ruthlessly eliminate all push notifications from the app. Just turn them off entirely. Ignore those trending stock lists. They're just noise.
And strictly avoid margin and options trading. These rules act as your personal shield, making sure your broker remains a quiet, powerful tool for building wealth.
So, as you finalize your choice over these next few days, I want to leave you with this one final question to guide you. What kind of investor do you actually want to become? Do you want to be calm, boring, and remarkably consistent? Or do you want to be reactive, anxious, and, well, entertained? Hopefully, this explainer really helps you build out an environment where good, stress-free investing is just entirely effortless. Thanks so much for hanging out with me today, and hey, best of luck on your investing journey.